Thank you very much, and hopefully you can all hear me. Okay. Thanks very much for staying for this session. Stronger Together, all about collaboration and how that might be the key to fighting financial crime. Nice to see you all here. I'm grateful, as I said, for you staying for this session. Lots of activity in the financial crime field at the moment. We've got the second economic crime plan, we've got the economic crime levy, which is on larger firms, which is going to be increased. And we've got the Economic Crime and Corporate Transparency Act, the Online Safety Act, and the Data Protection and Digital Information Bill, which is in the House of Lords, I think, today. However, the figures reveal that we're not winning, unfortunately. So cybercrime and money laundering are converging, and global cybercrime is anticipated to cost $9.5 trillion this year. So, I mean, the figures are staggering. There was an FCA report on reducing and preventing financial crime published on the 8th of February, where they've summarised their 4 areas of focus for the next few months. And as I said, there is a great deal going on right now. So we've got some questions that I'd like to put to the panel, but I'd like to start by asking them to introduce themselves, if you wouldn't mind. So, Kevin, if you wouldn't mind starting, over to you.
Yeah, Kevin Flood. So I work for FIS, so I'm on the vendor side of things. I look at, I get to stare at a crystal ball in terms of from a payments perspective internationally. Where are we going? What are the big trends? Are we are we investing in the right products? Are we investing in the right things for our clients to do the right things and help them on that journey as they look to go forwards?
Thank you. Claire, can you just introduce yourself, please?
Yeah, of course. Hi, my name's Claire Simpson. I'm a senior manager at the Payment Systems Regulator, and I'm responsible for all of the work that we're doing around authorised push payment fraud. So this isn't just the reimbursement requirement, it's also the publication of performance data, which we did for the first time in October, and also confirmation of payee.
Thank you. Michael.
Hi everyone, I'm Mike Hammond. I'm the fraud product owner at Pay.UK, and Pay.UK is the payment system operator for faster payments, BACS and ICS.
And last but not least, Angela.
All right, I'm Ange, and I am the agency refund and chargeback manager for Virgin Atlantic Airways, and I'm sure you all know what Virgin Atlantic Airways is.
Thank you very much, all of you. So we had some sort of preset questions that you might have seen, and we will sort of move around a little bit. One of the questions was whether the regulator-driven approach to financial crime is working. And I did say, not sure about whether it's regulator-driven. No, I think that financial crime at the moment is, in a way, almost completely reactive. And I'd like to get the panel, those of you who'd like to contribute on that topic, to what extent is the regulator driving activities? I mean, it seems we're responsive to criminal activity rather than, in general, getting ahead of it. What do you think, Kevin?
Yeah, and I think if we've listened to a lot of the conversations over the last 2 days, everybody's had something to say about this topic. And I think even earlier this afternoon, one of the conversations was, are we too regulatory driven, which is pausing some of the innovation work we can do, because we know we have to be regulatory compliant, otherwise we get in trouble. But then the same people who are doing this work should be doing the innovation work. And I think from an overall perspective, we are just constantly playing catch up with how clever the criminals are becoming. And it is yesterday's technology trying to prevent us today. And I think we can only be, especially with the regulations, we can only regulate what we know. Otherwise, we are, like I do, staring at a crystal ball in terms of working out, well, what is the next thing? What should we be doing? And then to use the word everybody's going to use, AI and generative AI, where will that take us? We don't know.
Yeah, I mean, I think the point you're making about criminal exploitation of the technology is a good one, that we know that has happened and it's increasing, and the response to it is necessarily we want to use the technology, but sometimes, as you said, the resources get diverted from the innovation into complying with regulations, and that's tricky. And of course, Claire, you as the PSR have a mandate to protect consumers, and we know that that's why the APP reimbursement has come in. Do you think there's any kind of conflict between your mandate to protect consumers and your mandate to try and prevent financial crime?
So at the PSR, we have a number of obligations as an organisation that we meet, and that includes consumer protection, but it's also around innovation and competition, and particularly in relation to the faster payment system. It's about the confidence that users can have in using that system. And I think that what we look to do is balance some of those objectives. In particular with the APP reimbursement requirement, it's not just about ensuring that customers get a better outcome if they become a victim of this specific type of crime. It's also about ensuring that the right incentives are aligned across the payment system, which is why we've particularly looked at the balance of responsibility between sending and receiving firms in terms of how the liability is distributed, because we think that incentive piece, both the financial one that comes with the reimbursement requirement and the reputational one that comes through the data we publish, need to be effective and targeted in the right places.
But when you've done your performance checks, we know that several of the banks came out. There was a sort of ranking, but if I remember, the top of the list was a sort of fintech company, and we also know that fintechs don't have as much money to spend as the larger banks. And they need to do proportionate sort of KYC. So it's quite difficult, isn't it? Because you want to incentivize them to do better, but doing better means they'll need to spend more money. I mean, in my book, a risk assessment is only as good as the data that I've got available to make the risk assessment on. And if you recognize that data, the right data costs money, then isn't it a little bit tricky to put the same burden on smaller firms than the larger ones?
So the data did show us that there was a disproportionate level of receiving fraud going to smaller non-bank entities. And I don't think this was a surprise to us before we published the data. I think one of the really critical things to point out is we recognise that those firms are in a very different position to some of the well-established banks who've been dealing with fraud and reimbursing fraud for a number of years now. But it comes down to a simple fact, which is that firms need to ensure that they are not making accounts available for fraudsters to receive funds into. And I think that what we need to make sure is that those firms are supported in that process, but they are sufficiently incentivized, as with the rest of the industry, to put in controls. Now, they may not be very expensive technological solutions that might be available to other firms. But if they are in a position where that is the case, there are some backstop provisions which they can utilize to limit their liability. They are able to limit transaction levels, they are able to slow and delay payments, and they are able to stop inbound payments if they have any suspicions about the transactions. Now, we recognize that that has an impact on customer experience, but it really is about those risk assessments and balancing that risk, which you're taking on as a firm, against the risk that you're exposing wider users of the system to.
But that will also put those firms at a potentially big competitive disadvantage. And I mean, I know there's not much you can't necessarily do that much about that. I think I've said many times that the regulator, I recognise, can't recommend a particular company, it can't recommend a particular technology. But I'm always hoping that you're going to be able to say, what's your real-time source of information? Because it is recognised that real-time sources are valuable. And I don't want to spend my time grilling you. I'd like to get Mike's view as well, because I think Pay.UK. Mike, talk to us about how Pay.UK, I mean, obviously you're responsible for faster payments. My feeling was it's great that you're putting these obligations onto all the firms, but isn't there more that could be done at the faster payment sort of infrastructure level? What's your feeling about that?
Yeah, I think it's a really good point, and I think what we're talking about with certain firms potentially being disadvantaged because of their the funds that they have available to invest in compliance technology and screening is a genuine issue that I think we need to be conscious of. And one of the things I think we're exploring as a PSO is the whole market approach to controlling fraud. So what in the centre can we do, and what capabilities and tools can we implement that everybody can consume and are sort of commercially viable? Two of those that we're exploring at the moment, so enhanced fraud data, which is the exchange of a data standard between a peer-to-peer exchange of two FIs who can understand a little bit more about the receiving account of where they're sending funds or where they're sending funds, which I think if we can effectively roll that out to the market successfully, will alleviate some of that. And the other that we're looking at, and we just concluded a proof of concept on, is the fraud overlay, which looks at a whole market approach to using data for analytics and machine learning to better detect and prevent fraud. And I think by implementing new technologies like that, we can help, as a PSO, the whole market improve, and you're not just focusing on necessarily your tier one retail banks, but it's technology that can benefit everybody. And I definitely think there's something there, and something that's really worth exploring.
I think you're right. I mean, I think also that the Payments Association, as an association which has banks, fintechs and regtechs as members, we are very open as an association to getting involved in those sorts of things. And I do think that the association has a very important role to play in terms of promoting firms which offer those kinds of data analytics. And I guess that proof of concept is at the moment running with UK Finance, but I think that my working group, the Financial Crime Working Group, would certainly be interested in getting very directly involved, if possible, in that.
Yeah, and I think that's really important as well. So there are sort of two proof of concepts going, one for enhanced fraud data, that is a UK Finance initiative, but we are partnering with them in delivery. And then there's the fraud overlay proof of concept, which is just concluded. We're not quite ready to publish figures yet, but they're good, which is really good. And so when we first looked at how we execute the proof of concept, is we knew that we needed a certain volume of data for it to be effective. But we also knew that we needed to have different entity types taking place. And the initial process was we needed to get data permissions to be able to provide a set of suppliers that we had selected to analyse that data and tell us what they could have done if they were in place. And so we actually cast quite a wide net to our pretty much all of our FPS connected entities and customers. And we ended up with initially quite a large set. But as you work through the practicalities and the resources that are required and the effort required, you sort of start seeing it whittling down to a committed few, which is what did happen. We had 8 banks taking part, which was great. And what we did see was that, we're really pleased to see, was that we had a mix. So we had some large retail banks and building societies, but we had a couple of smaller ones as well. And I'm really interested, and I haven't found them out yet, but what those insights are about how a solution like that can help smaller entities. And I think that the data is there, and we will be able to engage with those smaller entities. And I'm really looking forward to seeing it. How much they tell us is one thing, but I think that they'll be quite keen to sort of share the benefits that they would see as well.
Yeah, I think that's really good. And I mean, I think also because you're not a regulator, you can engage with suppliers in the market, and that's the important thing, because you don't have to maintain, you have to maintain some kind of overview, but if you're trying to be completely neutral as the PSR are, it's very difficult. Whereas if you're a payment systems operator, as you say, you've got to look at what the technologies are that are available, and it's a question of can you discover what those technologies are. It's one of the things that's difficult in this market is that some of the smaller regtechs, which are probably the most effective, are quite small, and to spend their time getting involved in tech sprints or even in the sandbox is quite distracting for them. So that's a shame, and I don't think that we have yet found a way of enabling that in a better way, but I think perhaps we will. Angela, if I could turn to you, can you tell us about some of the sort of issues that you at Virgin Atlantic have in terms of fraud, and then we'll come back to data sharing and collaboration.
Yeah, so what we've seen lately in the last 6 months is where we had the vouchers, the COVID vouchers, we saw a lot of people trying to sell them on social media, so on Facebook, on eBay, but they were, non-transferable. So when the people were coming to us and wanting to use them, they couldn't. They weren't in their name. And where we talk about, sharing liability, okay, yes, everyone's really good for the consumer, but what about the merchant? We do get really stung.
Yes.
A lot of the time, with things to do with fraud and how we can, defend the chargebacks that come in and the information. So, the sharing of liability, at the moment, is one of the things that I'm really trying to fight for, because it does always seem to go back to the consumer, to the customer, rather than the merchant.
Yeah, no, I can appreciate that point of view. And let's talk a little bit about data sharing, because we've heard throughout the conference, this conference, about data sharing's a good thing and we should do it. There's quite a few barriers to it. So, we think that there should be an initiative which is across the whole industry, which would help merchants as well as financial institutions and consumers. We've got initiatives like MAS in Singapore. They've got their Cosmic initiative, which is easier for them to do as a relatively small kind of self-contained city-state, as it were. It's a lot more difficult to do something like that if you're the FCA across the whole of this industry. And we know that data sharing is constantly being encouraged. A tricky question is, do you think that data sharing could be or should be mandated within the industry, or do you think that it's got to be a voluntary thing for now, but perhaps it might lead on to being compulsory? What do you think, Kevin?
It is a good question. And as we heard earlier on, we are bringing it in to be able to share more and more data. But Ange, as you said, it's got to be that whole cross spectrum. So you need it from the merchants, you need it from the telcos, you need it from the ISPs. You need that broad spectrum to understand from a payments perspective, well, I'm going to stop the transaction, but what about the rest of it? I'm stopping a transaction rather than an account, rather than an entity, rather than an individual or an organisation. And I think there's going to be a really fine balance between sharing what we can, when we should do to do the right thing, versus, and we're all businesses, is how I want to keep my competitive edge. And that I think is going to be that fine balance and that fine, like the tightrope to walk, as it were, that I think it should be mandated. You should, that's controversial, you should give it, you should have it, the same way we do with sanctions lists. But, we're not talking about countries or incredibly rich individuals 9 times out of 10. And it's understanding of what's the right level of information we can share and mandate that should be shared across all of those entities, so we can understand that front to back picture of, well, okay, it's emanating again from this set of accounts, or this Facebook marketplace, or whichever one you have. So then your ISP is going to have to get involved, and Meta's going to have to get involved, and all of those entities will have to play their part too, because ultimately the payment side of it sits right at the end of the chain. But we want to stop it at the front, and fraud does impact all of us, not just very large corporations. They've just got more money.
Yep.
To stop it.
And of course, one of the biggest barriers is fear of breaching data protection, which is quite understandable given that the fines would be very high. But we know that, I think Teresa mentioned that you can share the data provided it's to prevent or detect financial crime. It's there in black and white, but still companies are not doing it because they're fearful of this repercussions. They're fearful that they may lose their competitive edge. Claire, do you see any sort of resolution happening to this?
So I think those factors are relevant. I also think kind of culture is relevant, and consumer acceptance of sharing data is a big barrier for firms. One of the things that we've experienced, even through some of the really simple data sharing activities that we've been a part of, like confirmation of payee, that a collaboration between both the system operator, who can give effect to these types of activities, a regulatory mandate to do something can also help unlock some of those barriers. and also working, I think, with firms and their customers to understand the benefits of sharing this data. Now, we can only give effect to those kind of data sharing activities like confirmation of pay and potentially enhanced fraud data in the future within the payment system. And I recognise that that is only part of the challenge. What we're actually looking for is something that we could affect data sharing change across the ecosystem. I do think some of that, and I have mentioned this word before already in this conversation, some of that comes down to incentives. We are now very heavily incentivized within the payment systems to share data, to address financial crime and to limit liabilities. Those incentives don't necessarily exist in other parts of the fraud ecosystem, and I think that's where we really welcome the kind of Online Safety Act and the work that Ofcom are doing.
I think the consumer duty, one could argue, could tip you in the direction of having to share data as well. I mean, given that you've got this new consumer duty which is mandated, if you fail to share data and fail to protect the customer, it'll be interesting to see whether there are any cases that come up that are related to that. I mean, I'd like to think there might be, but I guess they'll be quite rare.
And it's also a way of managing some of the disruption that may need to be introduced to protect consumers, because the more data-driven, the more specific and targeted those interventions are, the more it's based on all of the information available, not just to you as a firm, but the information you can get from other firms, from third parties, will enable a much more effective approach to interventions.
Yeah. I mean, I was talking to Catherine Westmore earlier, interviewing her, and she thinks there will be less emphasis on the onboarding point and more emphasis on the transaction monitoring point, which I think is interesting, because if you take on board, somebody and you put down what their business model is, you can see when the transaction falls out of line with that. Mike, do you think that's going to be sort of something that will happen, or do you think there'll always be a massive emphasis on the onboarding point?
So I think one of the things that needs to happen is actually more of a coming together of your KYC data for analytics and for transaction monitoring. I've worked on both sides, so AML and KYC and transaction monitoring and fraud screening, and I know that in certain institutions the two systems don't necessarily talk to each other. And actually the value of the data that you gather at the KYC stage is actually significantly increased because you verified it a lot of the time. You know that it's good data and you know that it's accurate. And I definitely think even now there's a bit of a gap between the two, and actually bridging that gap, it takes, quite often it takes sort of changes to legacy systems that don't talk to each other because they weren't built to do that, but the capability is there. And there are certain circumstances where that can be leveraged, but I don't think it's necessarily enough. And if you can have technology that can do both and can refer you to your trusted information that you've gathered at your onboarding, fantastic, because you know the attributes you're expecting from your customer. You just need to be able to use that data in the right way.
Yeah, I think that's a very, very good point. Andrew, is it something that's of concern to you?
I do think we should be allowed to share data to a point. I wouldn't be afraid to share certain trends with other airlines. I wouldn't want it, because at the end of the day, it's the fraudsters, right? They're the ones we want to stop. They're the people we want to stop. To me, it wouldn't be that someone's going to be more competitive than us. I just want to stop them, and win the fight together. And I think by sharing data and pulling that together, that is how we're going to win the fight. Otherwise, you're going to continuously be looking in that crystal ball, So I do think, I know there's certain bits that we can't share, but even if it's trends, we start sharing trends, right? Across during, I can share trends across, the holidays and vacation side of things and the airline side of things, because I'm sure if I'm seeing it, Delta are going to see it. Someone else, British Airways are going to see it. Mm-hmm. So
yeah, I think it's a good point. And then one of the other points is, should we have more responsibility within this sort of chain? Because we kind of talked about the ecosystem and how everybody has really got to come together and be driven together. And it's not just the regulators in the payment space, but it's lots of other players as well. there's the enablers, there's law firms, there's accountants, there's all sorts of people who are regulated for anti-money laundering purposes. And it's no good just the payments industry taking responsibility, because it's got to be broader than that. Can you see a situation where that is something which is legislated or mandated so that the ecosystem itself takes responsibility? Kevin, could you suggest how that might happen?
It's a difficult one, because I think, as you mentioned, technologies weren't necessarily built to talk to each other, and a lot of the technologies that everybody has is going to be proprietary to them, and that's where we talked about earlier on briefly, was its competitive edge. Now, if it's just the data side of things, a lot of that, we do have a wealth of data that we can share, and as we saw, as we spoke about earlier on, sharing the right thing, trends, for example, absolutely. Why can't you share trends? What is competitive edge about the trend? But getting the technology to talk to each other, that means technology companies then going, okay, well, actually, we've built our technology to handle this data like this. We've built ours to do that. A lot of them use things like orchestration layers to say, well, we can talk to something, or you're going to have technology teams going, I'm going to have to join this team, this component to this component. They were never meant to talk to each other.
And that's data standards, isn't it? So
and it all comes back to your data sanctity, your data standards, making sure across the whole ecosystem, element A is element A, element B is element B, not, well, I've got a slightly different version. An interpretation of what element B should really look like. So when you try to marry them up, it's not really going to work.
And some of the smart data, digital protection, digital information bill, some of those things are going to make a difference, aren't they? They are going to make more standards. We need more standards in this field. Well, we've only got about 5 minutes to go, and I'd just like to throw things open to see if there's anybody who's got any questions they'd like to ask. So if you could put your hand up, I think there'll be a mic available. If you'd like to ask a question, please do go ahead. Anybody got anything they want to ask? Oh yeah, I can see there's a question there.
Hi there. I think one of the criticisms that we've heard today about the kind of app scam reimbursement model as a whole has been the fact it's this key tension between a competition agenda and actually a consumer protection end user interest lens. And so if we've set the app scam level reimbursement at such a high level, I think is it 415,000?
Yes.
Aren't we at risk that actually that one agenda of protecting consumers might actually completely undermine another agenda, which is to increase competition, allow smaller entrants to the market? And has anyone really thought about what safeguards we're going to put around that to stop that happening?
Yeah, I mean, I'll let Claire. I'll let you answer that. Obviously, one of the things which is now in draft form is the delay of payments, which perhaps could make a difference. I do think that the app reimbursement provisions are going to force more collaboration between entities, because everybody needs to think about that. I mean, some banks may consider that they don't want to be sending payments to certain entities. That also bothers me, because that will diminish competition. But Claire, I'll let you say what you think in relation to that. I mean, there is a bit of a conflict there, but you've come down on the consumer protection side in the hope that the other side will get improved by collaboration. Isn't that true?
So collaboration is a really important part of this, and I think the ability for firms to communicate in real time around a transaction, for example, again, like the enhanced fraud data, will be able to support that communication and collaboration between firms. We recognise the challenge. What I would say is that under the voluntary arrangements that have been in place for a number of years, there was an unlimited cap, so there was no cap to reimbursement under the voluntary arrangements. And we thought very hard about the limits that we wanted to put around these reimbursement requirements. And we made that decision in December. we have committed to producing more data, doing more analysis about the potential impact and the number of these frauds, and they are very, very small, the number of frauds that reach that limit, but they are often the most serious of crimes, and they are often the most vulnerable of victims. You know, we're not talking in this space about moral hazard. We're talking about people who believed their fraudster more than they believed their bank, more than they believed any other interventions. And in those circumstances, we maintain the view that the sender and the receiver of that transaction has more information available to it than the customer does in those circumstances. And I think it's also about customer acceptability. So of course we don't want to have delays to our everyday payments, but part of the transaction monitoring, which is potentially a solution to this, we think it is legitimate for firms to intervene where customers are making unusual or unusually high levels of transactions, and to check again that those transactions are not fraud. And that's both on the outbound and the inbound, so the receiving firm has a responsibility here. We think there are a lot of steps that all firms can take to be able to limit their liability exposure to this. And we want to understand how many of these transactions small firms make now, because you know you're talking about really high value transactions. And we talked about it earlier. You have to be able to weigh up the level of confidence that you can have in receiving those payments and knowing that they're not going to a fraudster with the level of intervention that you put on some of these really high value transactions. We do not believe this is out of the control of firms. We recognise that not all frauds will be stopped, and we're looking at the impact on competition. But we do think it's really important to recognise that we're talking about a very specific, very small set of really, really sad outcomes and unfortunate outcomes for victims of these types of crimes.
I think anybody who listened to you and yours and heard the TSB person in the call centre.
On behalf of the Payments Association, we would like to thank you for attending PAY360 2024. The show is now closed, so please make your way out. We'll see you next year on the 25th and 26th of March.
I just wanted to say, anybody who heard the you and yours and heard the TSB member of staff saying to the woman who was the subject of a major scam, you're not telling me the truth, are you? And ultimately, she had to concede she wasn't. He did do such a good job at that, but not every firm will have somebody who's a live person there making that intervention, because a lot of the newer firms will be doing automated things. So it is a difficult issue. There is just time for one more question if anybody's got it. I know we're technically out of time, but if there's another quick question, we could take it.
At the back over there.
Oh, yeah.
Hi, just a quick one on, I think everyone accepts that data sharing is the way forward, right? A challenge we to face into, though, is that there are multiple different fraud systems available now. So EFD is one, overlay services, and unless we work with one, we're not going to get the benefit. So how do we face into that? So I think data sharing is part of the issue, and actually we can resolve that. But if we end up using 10 different systems, we won't get the value.
Mike, do you want to talk about that, or is that something that you can?
Yeah, no,
I think thought about, I'm sure.
Yeah, it's a really good question, and you're absolutely right that there are multiple consortiums of data even out there that you can use for fraud, and firms do have a choice of, they have a certain budget for the next year's fraud control, and what do you back? And so it's absolutely the relevant point. And I think what we can do is demonstrate how certain capabilities can come together and actually be interoperable, as opposed to not necessarily competing solutions, but ones that do a different job. And I think there is a story there between how certain solutions like that can work together.
Yeah, I would hope we will achieve that. Thank you for that question. I'd just like to thank my panel very much, and I think we should give them a round of applause. Thank you for your time too.